Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is September 11th, 2025, and we're diving into the first quarter fiscal 2026 earnings report of Kestra Medical Technologies, a leader in wearable medical devices and digital healthcare. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Kestra's latest earnings report provides a fascinating look into their financial performance and strategic direction, especially as they continue to expand their market presence in the healthcare sector.
Revenue and profitability overview. Let's start with the top line. Kestra Medical Technologies reported a revenue of $19.4 million for Q1 FY26, marking a 52% increase compared to the same period last year. John, what are the key drivers behind this impressive growth?
Absolutely. The revenue growth is primarily driven by Kestra's increased market share with existing customers and the activation of new accounts. Additionally, the company has benefited from a higher mix of in-network patients and improvements in their revenue cycle management capabilities. This has also contributed to a significant expansion in their gross margin, which rose to 45.7% from 32.9% last year.
That's quite a leap in profitability. How does this align with their strategic objectives?
Kestra is focused on capturing market share and expanding the wearable defibrillator market. Their operational efficiencies and strategic initiatives are clearly paying off, as evidenced by the improved gross profit of $8.9 million, up from $4.2 million in the prior year period.
Operational efficiencies and future outlook. Moving on to operational aspects, Kestra reported operating expenses of $37.7 million, which includes $2.9 million of non-recurring costs. How should investors interpret these figures?
While the operating expenses have increased, it's important to note that a portion of this is due to non-recurring costs associated with becoming a public company. Excluding these, the expenses are primarily related to expanding their commercial and revenue cycle resources. Despite the adjusted EBITDA loss of $19.4 million, Kestra's strong cash position of $201.2 million provides a solid foundation for future growth.
And what about their future outlook?
Kestra has raised its FY26 revenue guidance to $88 million, reflecting a 47% growth compared to FY25. This upward revision indicates strong confidence in their ongoing commercial momentum and strategic initiatives.
EPS forecast and analyst expectations. Let's discuss the earnings per share. Analysts had forecasted an EPS of -66 cents, but Kestra reported an actual EPS of 50 cents. What does this tell us?
This is a positive surprise for investors. The actual EPS of -50 cents is better than the forecasted -66, indicating that Kestra is managing its costs and operations more effectively than expected. This beat on EPS, despite the net loss, suggests that the company is on a path to improving its financial health.
With only one analyst covering the stock, how should investors view this beat?
While the coverage is limited, the beat on EPS is still a strong indicator of Kestra's operational improvements and strategic execution. Investors should keep an eye on how the company continues to perform against its guidance and market expectations.
CEO insights and strategic initiatives. Brian Webster, the CEO of Kestra, mentioned several strategic initiatives in the earnings report. Can you elaborate on these?
Certainly. Brian Webster highlighted the company's focus on capturing market share and expanding the wearable defibrillator market. Kestra is committed to enhancing its commercial organization and revenue cycle management capabilities. These efforts are aimed at solidifying their position as a leader in the wearable medical device sector while fulfilling their commitments to patients and prescribers.
How do these initiatives align with their financial performance?
The strategic initiatives are directly contributing to Kestra's robust revenue growth and margin expansion. By focusing on operational efficiencies and market expansion, Kestra is well positioned to achieve its financial targets and drive long-term shareholder value.
Key takeaways. As we wrap up, Kestra Medical Technologies has delivered a strong start to fiscal 2026 with impressive revenue growth and an EPS beat. Their strategic focus on market expansion and operational efficiencies is clearly paying off. John, any final thoughts on Kestra's investment prospects?
Kestra's performance this quarter is a testament to their strategic execution and market potential. With a solid cash position and increased revenue guidance, they are well equipped to navigate future challenges and capitalize on growth opportunities. Investors should keep an eye on their continued progress in the wearable medical device market.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Kestra's performance in the comments below. Until next time.